Hey everyone, it's Evan here from the Trade Risk on Wednesday, May 24th, here with a midweek market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. Now, I hope you're doing well out there. The S&P 500 hitting all-time highs. That's something to be excited about. So let's talk about it. Let's jump into the action here. SPY ETF finished up 51 cents on the day, closing at new all-time highs. Now, we did an update yesterday. You can watch the last video on our YouTube channel. Gives a lot of our thoughts about where we've come from here in the market from, essentially last Wednesday's, almost 2% fallout here in the SPY, and we've now beautifully V-shaped from that move, and very quickly, just 5 days later, 1 week later, are now making all-time highs again. Very incredible action here. So the question we posed yesterday, the sort of standoff was, market got this nice V-shaped rally, we filled the gap. Now can we hold it? Can we hold above 239, 238.50, this upper level supply here? Can we base out and make a run to new all-time highs? The answer today is yes, we can. We got that move, that follow-through move, 5th consecutive day higher here for the SPY, IWM, and Qs, and we did get that all-time closing high. So going forward, that's still my line in the sand. Essentially, I want to see us hold above this upper level, 239 to 238.50, somewhere in here, the bulk of this supply where we carved out some support in here. As long as we can hold back above here and continue to maintain price above here, I think, that's it. That's a scenario. This is a situation where I'd want to be inclined to be bullish and be participating in this market for further gains to the upside. Now, are there things, are there worries, are there concerns? There always are, and let's outline a few of them. So the bear case, or the bear sort of factors here that they're going to latch on to, and things we should all be cognizant of, is one, we have some diminishing volume here as we rally back from a high volume breakdown day. So we had this as the high volume sort of capitulation, and then we're climbing higher on sort of diminishing volume. That's one factor. Number two is the IWM, the Russell 2000. That continues to be an underperformer. That's nothing new. It's been underperforming, but we really want to see that index. We really want to see the small caps start to take out some resistance, take out some meaningful resistance, start to participate. That would be very encouraging to see. Still aren't getting that. And number three on the sectors, we got XLU, we got utilities and staples that are kind of out in front here, breaking out and so to speak, leading us higher. Now we do have tech and semiconductors which are back to highs, so it's not all bad, but we do have those more defensive areas of the market that are kind of out in front here. So those are the warning signs. Those are the flags where, maybe you still don't want to be 100% all in here on margin, but maybe, still participating, keeping those facts in the back of your mind. Now, the bull case, of course, price action, trend. We're at all-time highs here in the S&P 500. That's bullish. And breadth, depends, it could really go sort of either way. Depends how you want to analyze it. Everyone has sort of different indicators, factors, assumptions on breadth. For me, it's kind of just sitting there in the neutral. It's not doing a whole lot wrong. We did have some divergences, light divergences back in here in the beginning of May. They've mostly corrected themselves, and it's just kind of sideways. It's expected. I don't see anything alarming one way or the other. We could, paint the picture and get real technical and say there's, very micro divergences one way or the other. But I think if you just take a step back, things are just generally in line with price and with what we're seeing at this point. So ultimately, price at all-time highs. We're above this general area, but don't fall asleep on it. If we start to quickly lose this, if we have a gap down where this becomes just a complete failure to break out, a bull trap, if you will, just like this was a bear trap last week, then, of course, we need to adjust. And of course, as we always try and say, it depends on your time frame strategy and expectations in the market. So that's the S&P 500. Let's look at the IWM. This is still sort of the trouble one here, finished up 10 cents on the day. You can see just the picture looking very differently. We're not at all-time highs like we are in the S&P 500 or the Qs. We're still stuck in this big, messy range. You could argue we're not doing a tremendous amount wrong, right? We're not breaking significant support below 133. 143. That's encouraging, but we're not moving higher either. So again, I think for the ultimate bull case here, the ultimate win here for the bulls is to get back above 139, get some, increasing volume on that breakout, and start to see the small caps lead us into May, into June, into the summer months. It's a tall order, but that's what we would really like to see to give us that confidence on the long side. For now, I think it's still, this is still a market you may want to pay attention to, and the big levels here, major levels here, 134, and then I'd say 139, just getting back above it. I know some of you guys hate that I don't have precise lines drawn here. I just care about the bulk of supply. When price is over the majority of it, I tend to lean more bullish, and as we get below the bulk of supply over here, then I'd start to lean more bearish. You can refine your lines, look at 142, you could look at 140, however you'd like to draw them. So that's the Russell 2000, and the NASDAQ 100, all-time closing highs here again. Nothing, this is kind of the same old spiel here. This continues to work. Large cap tech, these big names continue to sort of participate here on the upside and help lead this market higher and back to all-time highs. Just, again, a real monster here and just producing some incredible gains for 2017. So that's the landscape. Let's move into some of the other major markets. We'll start with GLD. GLD here had a nice reversal up 41 basis points. You could see holding this general area, holding the 20 period. We got this bounce off of 116 a couple weeks ago, and then it's kind of moved sideways in this little range here. So it's holding up, kind of a mixed, in the middle of maybe a longer term kind of messier pattern range, if you will. But, the trend, if you just kind of hash it out here, is kind of bottom left going up to the top right. So it's trying to grind out that upside progress here in GLD. So I'd say bulls are mostly in control there. SLV, kind of similar ever since bottoming out in May now. This had a horrible, one of the biggest or the biggest consecutive down streaks here in silver in history, I believe. Don't hold me to that, but I believe this was the most amount of consecutive days we had lower. And as we talked about in silver, it seems, this is definitely one of those that, an object in motion tends to stay in motion until it really, until you really see that trend line snapped. And we just saw it continue to move lower here. And now we're starting to see the exact opposite and just continue to grind higher here. So we're getting that 8 and 20 crossover there. Kind of a bull reversal today, up 13 cents, 80 basis points here in the SLV ETF, silver ETF. And in the short term, bulls are in control. USO also kind of hanging up here. It's been, an interesting trade. This continues to just kind of grind itself higher. Back in here, we were sort of bearish as it was below this $10 level, below the March lows. It recovered above 10, it based out, and now it's continued to push higher. So USO is holding where it needs to hold now. It had this quick kind of false breakdown here, and it's back above it into this old range. Again, a messy sideways range, so you got to be tactical if you're going to be playing this, but so far short-term trend remains higher. And then UNG had a little bit of momentum up here a couple of times above the 750 level. Just at the beginning of May, we had to pop up. We came back down. We popped up last week, and now we're coming back down again. So, just not the cleanest chart out there. For me, again, I was using 750 as a line in the sand. That may have to get pushed up to about 770. So really, for the bulls to regain momentum, I'd probably want to see it more above 770 at this point. But UNG kind of sideways and kind of messy at this point. So that is, I think that covers everything on the majors. Let's look at some sector analysis. XLK. So XLK technology, not quite back to, not an all-time closing high, but certainly very close back to previous highs here. Pretty attractive volume pattern. The volume here in the XLK is actually a little more impressive than, say, the S&P 500. Bulls getting a little bit of enthusiasm on this rally back. So XLK continues to remain its dominant leadership spot. Semiconductors, same thing, back to recent highs here, continues to move higher. If you're using this as a kind of a top end channel trend line, then perhaps we're at the extremes of the upper bounds right now. Can we accelerate higher? Of course we could. So pay attention to that, but leader nonetheless, no matter how you want to slice it. And what else do we have? XLP, so staples. something that is leading here. We're starting to get this breakout of this big range that we've been in since really February. We've been carving out sideways just around this $55 level, plus or minus 50 cents or so. And we're starting to get that breakout now to recent highs here, to new 2017 highs. So staples on the move, and utilities. These are the defensive areas that we talked about at the beginning that maybe could be a warning sign that, you know, or something that is not the ideal scenario when these types of sectors are out in front sort of leading the market higher. XLU is same thing. We based out since really February, and now we're starting to break out and emerge from this consolidation. So staples, utilities, leaders today, seeing some nice move to the upside. IYR, this one has been interesting here as it's found that support at the bottom end of this trend line that extends from December, January of earlier this year. Very cleanly sort of broke this this downtrend line that was in place since April, and then it's kind of back off to the races. Does this come back to the top end of the range? Seems like it's in motion for now, so IYR pretty clean to the upside here. And on the laggards, on the downside, financials, you know, still just kind of stagnant here. It did fill the gap from last Wednesday. Actually did it very close or just about, and it's still just moving sideways here, right? It's still in between this 23 to 24 range. I think those are the wider, longer term structural goalposts that you should be paying attention to. So below 23, get you cautious. You get a breakdown, perhaps this head and shoulders pattern in play here below 23, and then above 24 probably starts to invalidate that, and then perhaps gets a move back to those prior highs. So XLF Laggard, something to pay attention to. XLE continues to be more or less a laggard here in this downtrend. Nothing has changed since December of 2016. We've been in this kind of slow motion. We've moved more sideways at this point, but really we want to see the bulls get back above $69 or so. That would start to break, or at least at least the early stages of breaking this downtrend in XLE. And then IYT also, you know, getting right back to an interesting spot here around 163. You know, again, still kind of sideways and underperforming on a relative basis. It is holding these lows. This could be the final washout here that gives us the fuel to move higher. Pay attention to it. But for now, it unfortunately is lumped into the laggard section here on the sector breakdown. So that's it. That's all I had for today's video. I hope everybody's doing well. Thanks so much for watching. If you're new here, welcome. And if you like these videos, we post them a couple of times a week, and you can subscribe to our YouTube channel, stay up to date with the latest that we do. Thanks so much for watching, and talk to you guys again soon.